Hello, in this presentation we will be entering the setup customer balances within Excel and comparing how the setup of customers and balances might differ from that in software such as QuickBooks. For more accounting information and accounting courses, visit our website at accountinginstruction.info. First, we'll take a look at how it could be entered into software such as QuickBooks, then jump over to our Excel sheet and see how we can record that information into the Excel sheet. To download Excel files to go along with the presentation, we can find them at this URL, which is accountinginstruction.info/excel-files/. If we were to enter in new customers into QuickBooks, meaning we're starting a new business, the business has already been in operation, however, we have not yet entered that data into our bookkeeping system in a way that we want to track well, not yet putting it into the QuickBooks or in our case into the Excel data. When we enter the information, we may have some customers that owe us money and we want to put the customer on the books and the fact that they owe us money on the books. If we do that within QuickBooks, we may just have to see the customer list, put in the list of customers, and in essence just tell us the amount that they owe, and QuickBooks will then put that on the books in some way and track who owes us money so that we can invoice those individuals and track when we get payment from those individuals. For example, in this case, we may just have 3 customers that owe us money, one being Anderson Guitars, Jones Guitars the other, and Smith Guitars the last. And those are going to be the 3 individuals or companies that owe us money. And we can, in essence, just list out the amount owed to us within QuickBooks, meaning Anderson Guitars owes us $5,000, Jones Guitars owes us $7,500, Smith Guitars owes us $8,000. If we put that information in, then QuickBooks will, in essence, track that information and put it on the financials as needed for us, creating some type of journal entry that will make that possible. We're going to put that information into Excel and take a look at the type of journal entry that would be in process. What is QuickBooks possibly doing in order to keep this information in balance and track the customers that we have owing us money? If we go back to our Excel worksheet, we see that last time we just entered the inventory here. We're not going to be doing anything with the inventory. I'm going to unhighlight that. The inventory is done working on that. And what we're going to be working on now is the people owing us money. What's the account showing that people owe us money? That's going to be the accounts receivable account. In essence, when we put customers in the books saying that they owe us money, we are increasing the receivable account. So that's what we would expect QuickBooks to do, or some software to do, if we were just to list out accounts and say they owe us money. Now, of course, we will have to do something to some other accounts as well in order to have an equal number of debits and credits, and we will talk about that as we go. When we do enter this data into the accounting software for accounts receivable, we also need to track it in some type of subsidiary ledger by not just date, as it would be in the general ledger, but customer, who owes us money. That is in essence what we have put into the QuickBooks system. QuickBooks just said, just tell me who owes you money and put that beginning balance in the data. So we're going to make a subsidiary ledger. So I'm going to go all the way to the right. And this is where our subsidiary ledger will be located. We'll see a new item over here with our subsidiary ledger. And we're just going to keep going to the right, past the financial statements, past the inventory subsidiary ledger. And we've got over here in cells CR 6 or so and down, we'll see the accounts receivable subsidiary ledger. In essence, this is where we're just going to list out who owes us money so we can add that up and put that into the books. So, for example, we said that Anderson Guitars owes us money, so that's going to be the first item we'll have here. We're going to say Anderson Guitars, and that's going to be the first inventory out. So I just put my cursor in CR3 and just typed in Anderson, and I had it formatted to highlight between those cells. So don't put your cursor in the middle and type. Put your cursor in this first cell, CR3, and type, and then it'll populate across those 3 cells because of the way it's been set up there. So that's going to be the first person that owes us money. Now, we have the debits and credits. We're going to represent that over here in the subsidiary ledger as well. However, We're always going to have debits because over here we're talking about accounts receivable, which is an asset, which has a debits balance. So in cell CR6, we're going to say that Anderson owes us $5,000. So I'm not going to put a comma or anything, just going to type in 5,000. That will then populate over here and we'll have this running balance. Then over here in CV3, we're going to say that Jones Guitars, and again, I'm typing that in CV3, not CW3, even though it will then center across the whole 3 cells there. Type it in over here in order to make that happen. And we're then going to put in the balance in CV6. We're going to say 7,500, no comma or anything needed. Then when we select enter, it'll enter that data for us. One more customer we're going to put down here and add a new customer in CR11. That will be Smith Guitars, very original names, and enter. And note we're not in the middle here, we're just right here in CR11 typing that information in, and then in cell CR14 we will type the amount that of $8,000. Then we're going to go ahead and this item down here is going to be the total subsidiary ledger by customer, that 20,500. If we double click on that, that is in essence just summing up the ending balances for our customers, 3 in this case, Anderson, Jones, and Smith Guitars, owing us money, and enter, that is the information. So that then is what needs to be on the books in terms of the receivable. This 20,500, that's what people owe us. That's what we will then put in our journal entry. So we're going to scroll all the way back. So I'm just going to go all the way back to the journal entry in order to record this. We're holding down the left arrow, scrolling all the way back to our journal entry. And scrolling up, we see the first journal entry on 1-1. We are in cell A8. We're going to put this one in 1-1 as well. And we see that we're really recording this amount here. We want a receivable on the books. That is what happens. People owe us money. And it's an asset, it needs to go up. So we're going to do the same thing to it, which in this case is a debit. So I'm going to copy that. And I'm going to put my cursor in B8, right click, and we could type it in there, by the way. This isn't somewhere where you need to copy and paste or use the formula, but in order not to misspell anything, I'm going to paste it to 1, 2, 3, not this way. I don't want to make it green, but I'm going to put it 1, 2, 3. If you make it green, that's okay, but I'm going to keep it not green. I'd rather have it all nice blue and even, colors there or whatever. So, and then we could just type in the number. I'm going to recalculate it. I'm going to say this equals the 5,000 from Anderson plus the 7,500 from Jones plus the 8,000. And then enter, and that should give us that same 20,500. That's what we're going to put in the receivable. We're going to need a credit too. I'm going to put that with a negative 20500. Once I select enter, it'll put brackets and a comma. And then we're going to just need to know what that account is going to be. And this, what QuickBooks just puts an account in there. It just picks one and puts it in there. It usually picks an equity account, or it might pick unknown revenue or something like that. Or it might put it into opening balance equity. What we're going to do is put it into the equity account. We're just going to put that to the equity and hope that, or it should work out that, if we put in all the beginning balances correctly, that the equity will wash everything out and be correct as of the beginning point of the problem. That, in essence, is how QuickBooks allows us to just enter in beginning balances without journal entries and still work. It just forces it to put it into some type of balance. So we're going to put this into the opening balance equity. I'm going to copy that, or owner's equity. And then I'm going to put that here in B9, right click, paste 1, 2, 3. And then again, I'm going to indent it. You don't have to, but I'm going to go to the Home tab, Alignment, and Indent. If you cannot use the increase indent, you could just use the double click and use the space bar. If you can't indent because of formatting or the locked cells, then that's okay. You don't have to indent. And then we're going to record this. Now, in order to record this, I'm going to freeze the panes again. So I'm going to go back over here to AJ1. I'm going to go to the tabs. We're going to go to the View tab. We're going to go to the Windows group. Remember, these are the groups down here. If you're trying to tell someone how to move around, this actually is helpful to do this. So we're in the View tab in the Windows group. And within the Windows group of the View tab, we're going to go to the Freeze Panes item and freeze the panes. So now we have frozen panes, and when we record this, note we're going to record this first, second account here on the trial balance, second account here on the general ledger. This is a journal entry, by the way, that we recorded in the general journal. In other words, we journalized the journal entry within the general journal and are now posting this journal entry to the general ledger. So we're going to go back over here, and to do that, we are going to go to cell AQ8 because it is a debit and we're on the debit side. We're going to use formulas because it's very important to use formulas in case there's a problem. Formulas help a lot. And then we're going to say equals and point to that 20,500, which is in cell C8, and enter. If we go back on it, we see there it is. If we just want to type in there to get used to this, just equals C8, it will work. If you type in just hard coding the number 20,500, that'll work too, but it's better to use the formatting. So there we have that, and then we're going to go to the other side of this, which is going to be the owner's capital. So again, if I scroll back over here, that's going to be way down here. So it's going to be in the blue item. So it's in order assets, liabilities, equity. It's going to be in the same order over here. Here's assets in green, and there's the liabilities in orange, and there's the equity. So we want to be over here. I'm in cell BH14, and I'm going to say that equals, and I'm going to point to this 20,500, and that's going to increase this equity account from 2,897 to 23,378. If you get some cells like this ever happening, that means it doesn't fit in the cell. So to fix that, we're going to go up top to this item here, and we're just going to widen the cells out a bit, and there we have that so that they fit. And scroll back over. There are those items. Now, what did that do? Once again, now if we look at our financials, this is now what we have added, and it is now being populated here. That is being generated from what we just entered in the general ledger. And we just adjusted this in the general ledger. So that has created the trial balance now. And the trial balance is, of course, in balance, meaning debits minus the credits are 0, or the debit of 20,500 owed to us plus the inventory asset is what is basically owed to the owner. The owner has claim to those rights of the company at this point. In reality, that might not be true because we haven't entered the vendors yet. But at this point, that's what we have on the books, and that's what would be populated as we enter this data as we go. The same information is used to create the financials. So the financials that we would just jump over to within QuickBooks would be going there, and these are all going to the financials. If we go all the way to the right again, I'm just going to click the right arrow until we get all the way to the financials one more time. We see our information. There's the receivable. There's the inventory assets. There's our total current assets, which of course is also our total assets. Our liabilities then equals the same. Nothing is in the income statement at this time. And the equity section is showing the beginning balances of the same amount, the 23,378 at this point. So that's how this information would just populate. In QuickBooks, we can just jump right to these financial statements after we just enter a list of people who owe us money. If we go to the detail, we'll see this is what QuickBooks is actually doing. It's actually creating a journal entry like this and then posting that to the general ledger. It does have a general ledger. If we go to the general ledger, we can find it. And then it creates a trial balance and it creates the financials from that. And the reason that's important is because then once we have that information, we can go back and look at how the thing was created. If there's a problem, we can see the detail, we can see the audit trail, and figure out what issues may have arrived. To download Excel files to go along with the presentation, we can find them at this URL, which is accountinginstruction.info/Excel-files/.